you mean that supply and demand doesn't really make any difference? What is the relationship between the amount of above ground stocks of silver and the metals price? Because so many factors contribute to the price of silver, at least understanding the role of above ground stocks can help investors and others make informed decisions. This is a challenging question because accurate numbers are often difficult to suss out, especially because the role of silver has changed in recent years.
The Morgan Report with David Morgan.
David Morgan of themorganreport.com. Well, a little look back this weekend for the weekly perspective. This is an issue from the Silver Institute. They put these out, I think it's quarterly. This is about a year ago. We're in March, so a year and a month or so, February 2025. Front page, and the title of the article is Majority of Above Ground Stocks Are Unavailable to the Market Regardless of Price. And the subtitle is There's No Correlation Between Above Ground Stocks and Price, which implies, wait a minute, you mean that supply and demand doesn't really make any difference? So let's dig in. What is the relationship between the amount of above ground stocks of silver and the metals price? Because so many factors contribute to the price of silver, at least understanding the role of above ground stocks can help investors and others make informed decisions. This is a challenging question because accurate numbers are often difficult to suss out, especially because the role of silver has changed in recent years. Once only a storehouse of wealth, for instance, in bars, silverware, jewelry, and coins, items that stay mostly as they were produced and largely unavailable to the market. Silver has become an industrial metal that usually gets consumed or otherwise taken out of circulation, except for some recycling whose effects can vary. To explore this question, the Silver Institute and consultancy Precious Metals Insights, PMI, have published their research in a market trend report titled Price Sensitivity of Above Ground Silver Stocks. The most important conclusion is there is no correlation that exists between overall level of above ground stocks and silver price. Again, I ask, well, wait a minute. The above ground stocks is supply, and that doesn't have a correlation. So let's dig a little deeper. Other conclusions. Movements in bullion stocks have an impact on the silver price and vice versa. The vast majority of above ground stocks are immobile, with only small net additions to or subtractions from stocks on an annual basis. By the way, as an aside, to digress, I showed that to our members yesterday based on the COMEX inventories going back to 2012, which is, 13 years, 14 years back. And actually, the total inventory in 2025 currently is actually above average, but I digress. Next bullet point. Increases in bullion stocks are often positively correlated with price as investment demand grows when silver prices increase, which still stimulates higher prices. Multi-year drawdowns in bullion stocks have tended to occur in bear markets for silver and have exacerbated these. However, the drawdowns have typically set silver up for more substantial rallies as investors have rebuilt their bullion holdings. And above ground stocks of fabricated products less price sensitive than those of bullion. Only specific subsets of silver fabrication demand show a sensitivity to price, such as jewelry and silverware. And you can download the complete report. And what's interesting here is this chart over to the right. And what it shows is from like the 70s to the 1980 spike. The orange is the silver price, and the green is the inventory. The real silver price in orange, the above ground stockpile showing you through about 2025. So it is very interesting that what I've talked about, and not that many actually know, the fact that the silver industry was in a deficit from 1990, right about here, to 2005. The amount of silver was being depleted at a pretty rapid rate, although this shows it increasing. So really, where are they getting their numbers? I am not sure. I'm not going to argue right now. The point is, you would see the inventory increasing and the price falling way off. Much higher inventory in 2010 and 11, and yet the price did hit, I think it was last day of April, early May of 2011. I called that top, luckily. And then, of course, the price came way down. And, of course, now we're back up, to continue this chart. I mean, we're up into the 80s now. But it is an interesting thing to ponder. So let me go a bit deeper here. So how do we interpret the Silver Institute's missive that I just read? What the study demonstrates is something a little narrower than what it might look at on an initial look. The total historic stock of silver is not the same thing as the silver that is actually available to the market. These two concepts are often confused. Roughly speaking, humanity has produced tens of billions of ounces of silver throughout history. Round numbers, 60 billion ounces, 70 perhaps. Most of that's lost in landfills, bottom of the ocean, doesn't exist. I digress. Charles Rivers and Associates did a study on that. I'm one of the few that probably even has that study, but it talked about how much silver is just gone. A physicist will tell you all that silver exists, and from a physicist's perspective, maybe it does. But from a practical standpoint, it does not. All right. So a large share of the metal is dispersed in industry products, jewelry, religious artifacts, or household items. Much of it is uneconomic to recover or simply not offered for sale. In other words, it exists physically but does not participate in the market demand for bullion. Because of that fact, comparing the total above ground stock of silver to the price of silver does not produce a meaningful correlation. Most of that metal is effectively outside of the market. But that does not mean supply and demand are irrelevant. What matters for price is not the theoretical stock of metal sitting somewhere in the world. What matters is the tradable supply, the silver that can realistically enter the market at current prices. The tradable supply comes from three main sources: newly mined silver, recycled scrap, and bullion inventories held by investors in exchanges, COMEX, NYMEX, LBMA, Shanghai Gold Exchange, and the ETFs. Against that supply sits the demand from industry, investors, and fabrication demand. When these investment demands rise or industrial consumption grows faster than available supply, inventories tighten and prices move higher. So obviously a correlation between supply and demand. Conversely, when investment demand fades or scrap supply rises, or let's say industry demand falls off, prices can fall. In other words, the silver price is determined by the balance between market available supply and demand, not the theoretical existence of metal produced over several thousand years. The Silver Institute's research actually reinforces this point, at least how I see it. The study notes that movements in bullion stocks don't correlate with price. This is precisely because bullion represents a portion of the silver market that is truly mobile and capable of responding to investment demand. A useful analogy might be the global housing market. The price of a house in a city is not determined by every house that exists in the country. It is determined by the number of homes that are actually for sale relative to that number of buyers in that exact location. Silver works the same way. The existence of billions of ounces of silver embedded in electronics, solar panels, jewelry, and industrial equipment does not set the market price more than houses that are not listed for sale determine the price of real estate. What matters is the float, the metal that can realistically change hands. Seen this way, the report's findings do not undermine supply and demand economics. If anything, they highlight how small and truly the liquid portion of the silver market is relative to the total historical production. And that distinction is important for us. The silver metals market is influenced not by the entire stock of silver ever mined, but the relatively small portion that actually exists available for trade. Over time, it is an interaction between mine supply, recycling, and investment in industrial demand that ultimately determines price, exactly as basic economics would suggest. So let me sum up by saying that there's a couple of things to add. Price is set by the float, not by the historic total. Total stock doesn't set the price, the availability does. And with gold, everything ever mined still exists, as bullion can be returned to the market if prices rise. Silver is different. A large portion of silver production has been consumed in industrial applications, dispensed throughout the economy. And when silver demand rises, the market can tighten quickly because ready available supply is much smaller than the historic numbers show. Silver isn't scarce because it wasn't mined, it's scarce because it was used. Silver Institute actually reinforces this point the way I read it, based on what I just told you. But many analysts have said for years, the real silver market is much smaller than the headline numbers suggest. And when demand hits such a small market, price can move rapidly, as we all know. And that will conclude the weekly perspective for this week. I will be back next week with another weekly perspective.
Well, thank you to the great David Morgan. Always a pleasure to hear from him, and great to have him as a part of the channel, which I know we've had some changes in the recent weeks and recent years, and I think that is okay because things come and go, and either case, markets are continuing to move and we're continuing to cover them. So I appreciate you being here. Hope you're getting set for a wonderful weekend. And as we continue to see these stunning developments, especially with the Iran war, not to mention inflation, where the PCE just came in at 3.1%, but here's Pete Hegsmith on the Strait of Hormuz. No need to worry about it. Obviously, we saw some footage yesterday of oil tankers being blown up in the Persian Gulf that would suggest otherwise, but as oil holds near 100, Trump mentions that the U.S. has ammunition and plenty of time to fight the Iran war, suggesting that this may not be over very soon, like was floated out the other day. Getting the latest Fed dot plot next week, which should be quite fascinating. So in either case, hit the subscribe button and the notification bell, and we will keep you posted on the most important things to be aware of in the gold and silver markets. And again, if you're wondering why gold and silver have not responded more to the rather stunning events we've seen so far in this tragic Iran war, well, then you're in luck, and just click on this video coming your way that talks about exactly that.